Welcome into the crypto bunker. Today, I want to talk to you guys about what's going on in the markets. We have some serious volatility happening. We have um, commodities. We have everything pretty much crashing. It's pretty much a liquidity crisis. We have oil surging today, but we have gold down again. Gold is actually pretty flat right now. And I want to talk to you guys about why I think gold is a good long-term investment right now. And why I believe that silver might even be a good investment right now. So let's take a look at some of the charts. Like always, first, I actually want to show an article. And this is one of the reasons why I am bullish on gold and silver is because I think that prices are just going to continue to inflate to a point where it will affect the entire economy. It will affect people, companies, corporations, okay, people that need these commodities to continue to, prop up these companies. And these supply chains are already broken, and now we're faced with shortages and large inflation that once it gets rolling it sort of doesn't stop. I don't think that we're just going to magically go back to like a 2% inflation. We might drop a little bit in the short term here, and that's why I think things are sort of crashing, because the Fed is sort of affecting that with their increase in interest rates and with their quantitative tightening that they say they're going to do, but they're really, I don't think they are. So we'll see what happens. um, but in general, the world faces the biggest energy shock since the 1970s. Um, yeah, so basically they're saying um, that the developments have started to raise the specter of stagflation. The report said increase in energy prices in the past 2 years have been largest since the 1973 oil crisis, when the OPEC group of oil producing countries declared an embargo. So what we need to know is that we need to be prepared. Okay. We do not need to be in fear, and we need to be prepared. And asset allocation is one way to prepare. Because when things like this happen, when oil spikes, when, bonds are getting crushed, okay, there's margin calls happening every day. Banks are getting crushed. We can see this kind of reflecting of a recession that is pretty much imminent at this point. We do know that less food has been planted in the fields this year because of fertilizer shortages and fertilizer prices. We know that there's going to be less corn, which means obviously corn isn't every product on the shelves. So we have to realize that the price of corn will probably go up. And we're going to start today with gold, because I think that gold is probably the most important asset moving forward in this era that we're moving into. I think that with physical shortages of items, people needing physical things like food, we are going to see people run for, basically the physical items like gold and silver that they feel, will protect them. Because at the end of the day, crypto is a protection, but it's a long-term protection. I do still believe in crypto. I think that everyone should have a piece of these different blockchains as properties, but you have to realize that there's a major inflation on these tokens. And so, besides Bitcoin and Ethereum, which are closer to, I mean, Ethereum will be deflationary, and Bitcoin will be, basically slightly inflationary. But besides them, most of these coins are like 10%, of the supply has been released. I mean, some of them you can find, 80+%. I know Aave is like, high up there in terms of distributed tokens that have already happened. But you just have to think of like scarcity essentially. So digital scarcity, which I think does lie in Bitcoin and Ethereum. So, that's where you have to be fully weighted, fully loaded in one of those or both. For me, it's just Ethereum. But I want, my main exposure in crypto in terms of like 80% plus 85% is going to be one of those, and it's going to be Ethereum for me. In terms of gold, I do want to have an equal amount of gold to, maybe not totally equal, but definitely close in terms of, gold and silver, and then my crypto exposure. So, but what I wanted to show is that look how wide, again, wide on the averages here, but look how skinny we are here. Like people think like, if people seriously think that this was the top of gold of this whole cycle, you have to be out of your mind, honestly. I know that we had this run up here, and then we, had a double top here, right? That's what people will say, a double top. And then, maybe people think we topple down to the 200 again. I'm not really sure what they're thinking at these levels, but for me, the fact that we are still skinny, and the fact that we haven't even crossed the 50 with the 100 here. Okay, so the 50 moving average is actually below the 100 moving average, which is still showing an accumulation phase, and we still haven't even crossed bullish here, and we're catching support on the 20. Okay, so just like Benjamin Cowan says with Bitcoin, the 20 SMA is important to hold support. So we do want to hold support here around these levels, 1881 to be exact. But I still think we have room to, even plunge down here, as long as we can close above like 1850, in my opinion. We are looking still bullish here on gold. So there's really should be no panic in gold. There's also the fact that people are panic selling their gold miners. And again, look at this. We are still in the accumulation range. Again, wide right here. And we are lower than that even. We are lower than that. And so if you think about where we were, around these levels on gold, we were actually at the same level. So if we go back, we can see we are at the same exact level in November of 2020 that we are right now. And we're catching that sort of as support. GDX, on the other hand, is still not there. So it's below that level, and it's actually sort of coming into some key support here. So obviously this was rejected at first, and now it's being used as support. So in my opinion, if you have a I would say, 2-year mindset, or you can hold something for a year and a half. You might want to look at some gold miners as well for some exposure to gold, because not everyone can buy gold. Not everyone can afford to buy it. The premiums are crazy. And so, sometimes buying gold miners is actually a better exposure, like GDX, like Agnico Eagle, like Barrick, mining. I think these are blue chips. Okay. So GDX is really about the blue chips. GDXJ is more like junior miners, speculative. I don't think necessarily that the junior miners are a good play, because they have a lot of silver in there, and silver is a little bit more speculative, especially in a recession. So that kind of makes it a little bit tougher. But I think that even some of these gold miners, they produce other commodities. They produce copper, they produce silver, they produce nickel, zinc, all these things that the economy needs moving forward in this, clean energy environment. So if we take a look at silver here, again, sort of the same, thing here. So we were obviously very wide, and then look, we're below that level again. Now we're obviously below all of these moving averages. So if you look at this objectively, you could see us actually coming down, and potentially coming down to the 200. I don't think that we'll get there. There is very strong support around that 22 region. It is discouraging to see this. We all know that silver is the most manipulated asset in the history of the markets. The bullion banks, they take out shorts on silver, and they actually basically knock the price down with paper silver. So it's derivatives, really. It's not physical. If you look at the physical price of silver, it probably is below 30 at this point, but it's definitely a lot higher, because there's way more demand for silver than people give credit for. So, we can see that, 1 ounce is basically going to cost you like $29. So that's kind of like the real price of silver. And you know what? The Silver Institute came out with an article that said, I believe that like silver demand to reach its highest on record in 2022. So it's BS that they can knock the price down like this, but I think that because they're doing that, it's an opportunity, because we know that silver does well in these crazy inflationary food shortage times, based on history, and we know that it's manipulated. So when that manipulation ends, or if the manipulation somehow goes the other way, like right now, I think that a lot of these companies like Bank of America, who has this big short on silver, they're probably covering their shorts here, right? Because they know that we're still in an inflationary environment longer term. Even if it's shorter term, we go back a little bit and we lose some steam on inflation, which I think we will. In fact, I know that we will. So next CPI is going to be lower than this one. So just keep that in mind. It's not going to be a lot lower, but you can see it at the gas stations. That's pretty much the main thing you have to look at. Is we know that in the month of March, the price of gas was higher than the month of April. So we have to look at, that in terms of the next CPI print in May, which will be focused on April. So, but yeah, it says silver demand will climb to a record level this year thanks to increasing use of solar panels as governments boost renewable energy to meet climate goals, setting up the stage for years of supply deficits, an industry report said. Global silver demand is expected to rise to 1.1 billion ounces this year, up 5% from 2021. That is the highest since metals-focused records began in 2010. And they believe that this will basically be the start of a structural change in the market where we see deficits that will carry on for some time. So silver deficit is basically when the demand for silver is higher than the actual amount produced, which doesn't mean that that silver isn't out in the market somewhere that is able to be found, but that means that miners producing silver. And the thing about miners is they're not going to produce more silver unless the price of silver goes up. So you have to realize that a silver deficit means that the price has to go up, especially if it's a strategic metal that people want to use for solar panels and EVs moving forward. So if you have a long-term mindset, silver is like one of the best investments you could possibly make right now, because it's 50% less than its all-time high. It's used for all these clean energies, and it's an inflation hedge. Plus it's money, right? So gold and silver are money at the end of the day. And paper currency is not anything. And eventually I think, if things get crazy enough, people will realize that, and they will run for what they know is real in the back of their mind. They might not realize silver and gold at the moment, but when people have that like lizard brain effect, when stuff hits the fan, to go get physical items, gold and silver, right? Like cyber attacks. If the cyber attack happens, people are not running to go buy Bitcoin. Okay. They're running to sell their Bitcoin if they can, and they're running to, buy gold and silver. So just keep that in mind, that physical items are going to be needed moving forward as part of a portfolio. Now, I am someone that is still bullish on crypto. We can take a look at that crypto right now, just to kind of take a look at Bitcoin as sort of the main player here in the crypto space. And I'm bullish on innovation. I'm bullish on Web3. I think that it will be a good thing for decentralization. And hopefully that can work out. But it's still speculative. Okay. So we have to realize that. And right now we're sort of trapped in between these moving averages here on Bitcoin. And it doesn't look terrible to me. Like, I think it's not really like crashing as much as it usually would in this situation, in this type of situation, in like a liquidity crisis crunch here. It's down 5%. I get that. But if you look at it on the weekly, I mean, what I drew here is like, okay, we have an ascending wedge, and we obviously broke through this ascending wedge right here. Okay. So, there's people that say that like, this is the targets that we're giving it, because it's a bear flag, bear pennant, and then you have to fill this whole pennant down again. which would be around 8,000. I don't necessarily think that's the case, but I have talked about the 200 moving average. And if you listen to my videos previously, I said this is a good spot to dollar cost average in to some cryptos because I mean, they're not even that much lower than where they were at when I said that. Okay. So I said, if you have 25% cash or if you have cash, put 25% into crypto and then just kind of see what happens. Now, for me, I, of course, wasn't able to hold back because I got all bullish on crypto for like a couple of days. And I'm not like, waking up to the reality that, okay, we're in a bear market. I get it. It wasn't that much, but I'm just going to keep accumulating. And I think that if we do go into a bear market, again, this could be like one of the best opportunities ever, right? I mean, it's not something where you want to go all in because that what we're facing here, right? Like we're breaking free again on dot. We broke this sort of support here where we again had an ascending wedge. And the targets for me are down here around 940, 11, 1250 in that region. And worst case bear, scenario, we just go back to, where we started, like $5-6. I'm not even going to be shocked, if something like that were to happen. Although let me not say that because I think Polkadot has a lot of support. And I think that the parachain auctions, these guys, like you're giving up all this Polkadot to these parachain teams, which they're going to be hundreds of teams, like we'll say 100 teams that are building on Polkadot that are getting dot loaned to them to back up their project, but they're not allowed to sell that dot. So the supply of dot is becoming, basically harder and harder to get. Now, obviously there's dot whales who are, going to come in and, dump. And there's dot is also owned by the most venture funds like VCs out of any other crypto. So, some would say that's bullish. I would say in a bearish environment, it might even be more bearish. We don't know if they are allowed to sell, if they have liquid tokens, if they were, had to lock them up for a certain amount of time. So anyway, I hope that I covered sort of the gamut of what's going on today. I know that we didn't really look at like the S&P. Obviously, I've given targets for that. I am pretty bearish. I do think we touch down around these levels at some point. Maybe this is just I kind of drew this out because I'm like, what if this is just like a giant wedge that we just kind of like chop around in, and people sort of get confused. They think we're going down and then like we kind of just like go sideways and then we pop, so I think that's like the best case scenario for the market right now is to form this giant wedge here. So I'm going to see how that plays out. I'm even going to leave that drawing just to see like what happens. So this is like the super bear, and this is more like the realistic bear, where we pop out, in a year, maybe things get better. Maybe they stop tightening. Maybe they start to print money again, which is basically what we're going to need to survive. And again, that's just going to cause more inflation. So it's kind of a messed up, system that they created, but that's what you get when you're at the end of a 100-year debt cycle. People don't want to own debt in an inflationary environment. And we know that we're going into that as the world faces energy shock that we haven't seen since the 1970s. So we're in a pretty bad spot. But again, if you're prepared with everything that you need, like we talked about, you can watch my previous videos. I do have a specific one that talks about preparing and how you can be self-sustainable in these times. That's definitely what we're going to need here moving forward. So hopefully you guys got something out of the video. If you did, please like, subscribe, and have a great day.